for taking time out and joining in. We've been taking stock of all that's happening across the globe of late, and given that it's a bit of a shaky setup, nothing alarming, and now we're on the brink of breaching 19,000 on the downside. Is this a start of what could be a deep correction or just sort of a pause button?
No, I would take it as a correction that happens once in a while. Probably an opportunity to buy, given that overall growth outlook remains good and strong. So that would be my initial thoughts.
Why do you think this is not going to be a prolonged correction? Because valuations aren't exactly attractive. Global cues are slightly sticky. Macros are not that supportive. So the ingredients in the melting pot actually are favoring a downside rather than the upside.
Uh, so if you look at the ingredients, global, yes, is an issue, but that volatility comes to India, to my mind, if our forex start to drop. Now, given the comfortable position on the forex, I think our central bank has a lot of elbow room to keep policy growth oriented in the country. So if forex starts to drop, then I think that elbow room will reduce, and we would also have to keep rates higher for longer, maybe make them even higher than what they are today. Else, we are fine. Second, if you look at our linkages with the world, look at how much we export. 18% of GDP, 1% drop in global growth impacts our growth by 18 bips. Given that this is an election year where spending is higher, generally speaking, that is what we need to make up in combination of more of personal spends and capex, which I think is doable. So, to look at globe and paint a pessimistic picture on India is not correct. While yes, sentiment-wise, we should also get hurt. That part taken, and hence I am saying the downtick should be taken as a opportunity. Yeah, our construct of valuation is 18 and a half time 1 year forward earnings. Now, even before this quarter and a week back, when we checked 25 earnings, most people had, 1090 to 1100 kind of EPS on the Nifty, which gives you 20,300 kind of target for Nifty end of the year. We were there, we came back, we could be there again. So I think very, very defensible levels on the larger cap indices.
Prateek, so as a portfolio strategy, what is it that you should be doing right now? Because, a typical churn and weakness in the market. I mean, right now we've even reached 19K on Nifty. So it's a good over 1,000 points actually from the top, right? And that bounds to shake off weak hands out of the market. But as a portfolio strategy, what is it that you should be doing? Get away from the losers, book partial profits, already start buying? And if so, buy what? Buy more of the same? Or do you think when the market begins its recovery, there will be a newer set of winners in the market this time?
So if you think that this is a correction on the way, then the same set of winners should continue. We think it is that way. We are high quality growth investors, so the themes like uh, banks focused on retail continues. We are hardly there in large cap IT. I think that's a space to not be there. We are there in new tech. I think that space continues to show strong growth. Engineering, again, engineering, defense, chemicals are spaces where growth momentum in terms of volumes should continue to be strong as we go forward. So I see more this as yet more as a hiccup on the way, which will keep happening in the market. One should always expect it to happen, and hence I think the same space will come back again.
When you say same space, are we talking about defense, railways, power?
All of those themes, whichever ones So there were some fluff definitely built up in certain spaces, more on stories. The farther off earnings growth lied, the more difficult it would be for those spaces to come back. But where earnings growth is strong and continuous, I think those spaces one should expect to come back reasonably quickly.
What's been your portfolio strategy of late? I mean, financials is part of everyone's portfolio. How are you dealing with that?
We are underweight financials as a house. We are underweight tech as a house. So two large spaces in the index. We are meaningfully underweight actually. Taking money from there to invest into other growth themes, which since they are newer, are less there in the index. So themes like luxury consumption, themes like hospitals, engineering, defense, chemicals kind of stuff, less there in the index. So which is how we are positioned.
Don't
Yeah.
if you don't if you're underweight banks, if you underweight IT, that's about 45%. So what do you own? I mean, where are you overweight then?
No, so it's not that we are zero there, uh, but say 10-15% of money is taken from there to invest into the other spaces that I spoke about.
Sure. Interesting. So, give us some color on where is it that you are underweight within financials as a pack, and what is it that you still have in your portfolios?
No, so larger cap banks, we are generally underweight, don't see valuation upsides there. The transitioning from one regime to the other is something that will take time, and I think we should give that space that time. Something similar happening in some of the larger NBFCs, so we are not there as well. Versus that, we are there in insurance, life to some extent, health in a bigger extent, and that's been a big reason for alpha for us. We are there in luxury consumption, so premium end builders, jewellery guys, so those kind of stuff. I think there the growth outlook remains good. And yes, engineering, all of the themes that you spoke of, defense, railways, etc. We are either invested into companies which are directly exposed to those themes, or through cable companies which will benefit one way or the other from the underlying.
Okay. Now, I'm going to take the clock back and talk about some of the core positionings of Motilal Oswal AMC. They were centered around autos. They were centered around names like Eicher, Page Industries, HDFC Life, HDFC Bank. But there seems to be departure there. I mean, whatever information which we have in the public domain. Why such a big departure? Because if the QGLP framework was at play that time, how come that framework is played differently right now?
No, so one can have either a Q part which is very high up. So what high Q will do is to have a lot of free cash in the immediate term, and that can result in some upside. Or you can have a very high growth quotient. So the change that you are seeing is something that we captured in our November communique. We said the high quality part, the highest quality part of the market is just too expensive. We are not there, and that's the change that you are seeing. We are in decent, much better than average, but not the highest quality part, but very high growth part of the market. So we believe we are running some of the highest growth in EPS portfolios in the country today.
Great
And
to
that is the
then.
place where we believe some alpha lies.
Okay, great to have you then on the show today. Thank you so much for taking the time out, Prateek.
Thanks. Bye.
Let me now welcome on